Hi there. So this is the second video I'm making on my portfolio update. I made one last week, and since then there's been a few adjustments to my portfolio. I was planning to do these every day, but at the moment, when I don't have many opportunities as a swing trader, the markets are still selling off. There is some bearish sentiment. So I'm going to be talking about that a little bit later, but I want to go into how the portfolio is doing at the moment, how I'm preserving capital for this period, waiting for a move higher in the markets, maybe this week and next week. I'm expecting a move in April for sure, but we're already positioning ourselves in a few sectors, such as quantum computing, where I think there's going to be some huge upside there in the next 2 to 3 months. And of course, we are also watching other industries and sectors such as semiconductors, which I think are going to be picking up this week. So yeah, I'll be talking about all of this. First of all, I want to cover my portfolio performance so far, update you guys on the trades that I've taken since the last video, and then I'll go into some new ideas that I have for this week and where I see the markets overall. So as you can see here, nothing much has changed since the last video. I am up 9.2%, around the same figure since the last video. I have, however, made some adjustments to the portfolio. What's happened since then, though, is there's been a bit more of a sell-off on the S&P 500, while the NASDAQ has picked up. And this is because the tech sector is a bit undersold. And I'm going to be covering the tech sector a little bit later on in this video, so you guys can see what I'm looking at and what I see as potential there. At the moment, there is a nice equity growth curve here. We're seeing, I went from 3% in Jan to then having around 5.29% in Feb. And then because I shorted a bit the market and also preserved my capital and entered the European market and the Chinese market, I'm now up 9.2% on my portfolio. As you can see, nothing much has changed. So I don't really want to be dwelling on this too much. What I want to be focusing on is what I did with my portfolio since the last video. So in the last video, I mentioned that I had IQ, and I wasn't liking the lack of momentum here. As you can see, the candles are selling off around this area constantly. There's clearly some sort of supply coming in here. And I don't like staying in weakness. So although this seems fairly strong, I raised my stop loss around this level and I was willing to take a small loss. Bear in mind that this was my original stop loss. So it's only a fraction of that original stop loss. And I'm willing to take that. Now, I'm also looking now at potential rebuy here on today's open. Just something I'm assessing. I have to see whether I like it or not. It doesn't really move that well, this stock. It kind of has, every candle has a bit of a sell-off. So as you can see here, sell-off, sell-off, sell-off. And also when it does trend a little bit, it sells off around these areas. I still think there's potential for 1 to 2.5, 1 to 3 here. So I might be willing to take on this trade today. It's just something I'm going to consider on market open. But this is one that I sold. I was willing to take a small loss. At the moment, the portfolio is still holding Credit Agricole, and you'll see why. A lot of strength here. So very nice stock that's been performing for me since January. BNP Paribas as well, another French stock performing for me since January. Currently sitting on around 28%, which is a 1 to 14 risk-reward ratio here. I did sell some here. I sold about 30% here for 1 to 12. I wasn't expecting this huge move up here, but, it's still a very, very nice trade that I could still ride a little bit higher if it continues moving up higher. And this is one of the reasons why the portfolio is still growing. We've seen the US market sell off a little bit around this area of mid-Feb, while the French market has risen higher. And then we've also seen the Chinese market do fairly well and stay stable. but the European market has been very good to me. And this is the reason why I've been able to gain another 4 or 5% this month while the market is losing. As well as obviously taking those shorts I mentioned in the previous video, which are here, HIMS, WMB, Palantir, LRCX. I did sell these really quickly, expecting a rebound in the market. The next one is NetEase, another Chinese stock. As you can see here, a bit of weakness, which I don't like. And I'm looking to sell around this area here on open today. I just want to see whether there is a rebound on open. If there isn't, then I'll cut this short. And as I mentioned with IQ, it's only a fraction of the original stop loss. So, if I'm risking here 1 or 2%, I'm only losing 0.5 or 0.2% of my portfolio, which is nothing really for taking that risk to make somewhere around 3 to 5% on the portfolio just on this trade. NEO is a trade that I took during the week. I think I mentioned it in a previous video. Went really well here. We had a 22% gain, and then we had a bit of a dip. I kind of like this zone here, and I think we can kind of get a bit more volatility here and a build up, maybe consolidation. Sometimes I say volatility rather than consolidation, because usually consolidation zones have volatility and a tightening in price, and then we see a potential upside move here. I really like NEO. I think it's been setting up quite nicely. I took a trade here previously. It's a lagging stock compared to other Chinese stocks. It's an EV play, so if Tesla and other EVs start picking up some momentum, we could see it move really well. And I'm in a strong position here where I'm around 10% plus. Found a bit of support here as well. So I've entered around this area. There is some margin of safety in this zone here for me. So I'm willing to just hold it through, because I have this margin of safety here where I can essentially sell for break even if it goes wrong, or for a small profit. Okay, that's what I'm expecting on NEO. And then on Friday last week, Thursday, I'm kind of regretting missing QBTS because I've watched it for a long time, and I also traded it last year, and it's moved extremely well. But I traded Rigetti, RGTI, in the quantum computing space, mid candle here on this a breakout around the $10 area. I'm around 12% plus here. My aim is to make a 1 to 4 maybe on this move. Let's see. I'm being very cautious here, but yeah, I think we can probably make a 1 to 4, and we'll just have to see whether the momentum follows through after the midpoint break on the RSI like it did previously here. Even if it doesn't, and it kind of just comes to this area here, I can make a 1 to 2 or 1 to 1 or 2% on top of what I've currently made, while I'm still preserving capital and waiting to build my portfolio and add more. Typically, I don't hold just 4 stocks. I will hold somewhere in the region of around 10 to 20, sometimes even more. So when I'm very bullish in the market and I'm seeing plenty of opportunities, at the moment there isn't many that I'm seeing. IonQ is one for re-entry. And I think what I'll do now, though, is I'll cover some statistics that I'm seeing in the market. I did share this Rigetti trade in my Telegram group here. It's a free group. I just use it to document my trades. Not all of them, but most of them. And you can see here that I basically said I bought some today. Very risky considering the mean reversion zone in the markets. So again, if the markets are mean reverting, it's usually a risky zone. High volumes in quantum computing space. That's the reason why I bought it. And then I kind of updated them later on this around here, around this area here. Now, what I wanted to cover, though, is some general analysis about the markets, which I shared yesterday in this group. So if you guys want to join, it's completely free. I share my insights and analysis here. I don't really provide signals or anything like that. I kind of just share my ideas, and whoever wants to use them can. One of the things that I noticed is the S&P 500 is oversold. So extreme oversold signal here. And we've seen previous signals historically around this area. And when we get these oversold zones, the good buy-up zones, and not necessarily every time that they are good buy zones for big moves upwards again. They can be just temporary moves, that kind of mean reversion zone. So the S&P 500 can revert back to, let's say, 5,900 and then come back down if there's more fears, if there's fear in the market that there's going to be a recession and other issues related to instability in the markets. But we're in a nice area here where it's becoming very oversold, and previously these zones are nice buy-ups by the market. So we might be seeing a buy-up this week or next week. Another chart here which shows that data when we've seen a 10% drop and then 90% of the stocks in the New York Stock Exchange, which 90% were gaining on Friday, we then get a move upwards here, as you can see. And then, this is a situation where it's a mean reversion, then a dip further. This is a situation where we get a huge buy up, and then here again, huge buy up with a trend following afterwards. This is another occasion of a mean reversion and then another dip. So again, it's like a 50-50 coin flip. We might get a temporary move and then a dip further down, but it's a nice sign that we're probably going to get some nice momentum in the next few weeks. This one as well here, capturing kind of like the same data, 90% upside volume, which is what we've seen for Friday. We also have some statistics here on the buy up, so at least 10% below the 52-week high. So these moments here and this zone here as well is in that kind of territory. After 2 months, we have a 92% chance that the market's going to be up. And then after 6 months, we have a 100% chance that the market's going to be up. So we're in kind of good territory here that potentially we get a nice move up in the next couple of months, maybe another dip, and then we get another move up so that we close the next 6-month period with a percentage gain in the S&P 500. So this is what I'm watching out for, because if I do position myself well here, not only have I preserved my capital and gained 10% during this period, while the market is 7% down, my plan is actually to go in fairly aggressive on the rebuild of the portfolio when the market shows some bullish momentum, and then potentially make another 20%, so be around 30% gains, while the market has potentially only is only around break even since January the 1st. So I could be having a 30% gainer here for the first 6 months of the year. And I think it's very, very likely that will happen, considering that there is a high potential for a move in the markets. Similar, and I'll go down here because there's some other stats, but similar to this, right? So Trump 1.0, which was 2016 to 2020, 2021, we had tariffs cause a momentum up in the markets and then a sell-off, and then we're around that same kind of trajectory here with Trump tariffs 2.0. So it goes back down, the markets become cheaper, and then we get a buy up. This is the moment here, which is late March, April, where I'm looking to make around 10, 20, 30% in the markets and lock that in before we get a sell-off in May and June, and then potentially another 10, 20% on my portfolio in the third quarter of the year, which is June, July until September. So we could have 10% gain here in a very bad volatile market, 20. This is me kind of just projecting here what I think I can do this year based on what I think the market will do as well. So potentially a 60-70% gain this year, depending on how well I select my stocks and build this portfolio, which I'm sharing with you guys as much as I can every day. And like I said, if you guys want to see the trades I'm taking and the ideas that I have, you can go on this Telegram group, which is completely free. We have around here we have around 936 members, which are using this information to make wiser decisions in the markets. Another statistic that I like is this kind of bearish, the fact that the market is very bearish right now. It's leaning too bearish to what it needs to be. And you can see here previously we've had this kind of level of bearishness in 2008, and then we had it in the 90s. 2008 was a kind of like the big crash in the market. So potentially we could also see that if it's this bearish, that there is potential for that move. And there's also other factors that I want to cover here as to why it can still be bearish. I'm willing to go short again on some stocks if that momentum dies out. I think it's fairly bearish. It needs to come down for a little while, this bearishness, and then maybe go bearish again. But yeah, we'll just have to wait and see. This is what I'm positioning for. It seems to be working fairly well for me. My general outlook and perspective on the markets. As you can tell with the performance so far this year. Now with S&P 500, there were a few things that I covered. I think maybe on the Telegram group it might be easier here because I've already shared the charts. So S&P 500, there's a nice rebound here on the 0.618 Fibonacci. I don't use Fibonacci's often, but they seem to be respected here on the S&P 500 quite often. So this is a nice rebound zone, potentially to this retest of 5,900, which is where I'm looking to position myself now for the next couple of weeks. On the long side, again, if this flips, then I'm happy to kind of sell quickly. As you can tell with NetEase and IQ, I kind of sell really quickly and I don't really mind. And then potentially once the retest is done, a shorting market. But yeah, we're going to have to wait and see here how that's going to work out. The NASDAQ, very similar here again, the 0.618 being retested, so that's a good zone. And then another thing that I shared was the XLK chart. This isn't very clear because I had to share it on my phone. I wasn't on my computer over the weekend, so I'm just sharing this on my phone. Here you can see that when it sells off to these levels on the RSI, we usually see a buy up in tech, and we've seen NVIDIA and some semiconductors being bought up, and that's where I'm probably going to be positioning myself this week and the next few weeks. I have a few ideas I'm going to be sharing now after I do this general analysis of the market. So this is another reason why I think tech will pick up and why we saw the NASDAQ also pick up, because the NASDAQ was down around 7.5%. I think the S&P was 4.5% down. And then what happened was money cycled back into the tech sector. NASDAQ went up. It's only down around 5% now. But yeah, tech is a good opportunity here. And then in terms of tech, what I'm looking at today, I'm looking at COSQ Corp, which is semiconductor play. I'm looking around this area here for a breakout. We're kind of seeing a pre-market here. I'm hoping we can get a little bit of a dip here, and then I'll buy up, and then we can go all the way up here for 1 to 4 potentially. A nice tightening on this one as well. So I'll just show you guys. I'll probably share this on the Telegram anyway, but there's a nice little tightening here, support around this area, a breakout here, which I like, and then upside potential as well. And then if we look at the analyst ratings, they rate around $6 in the next year, but this could kind of do $6 probably in the next few weeks, and then you can get out for 50% gains if you want. And the stop loss probably might be a bit tighter here to get a nicer risk reward ratio if it breaks up properly. This is one of them. Then there's SMCI, which I traded on this move up previously. So I locked in some profits here prior to sell. And then now I'm looking for another rebuy on the breakout here for potentially another 1 to 4. So I can make another 4%, 5%, depending on how much money I'm risking, how much capital I'm risking based on my portfolio. So if I'm risking 1%, I can make another 4% on this. The other one I liked was Kinder Morgan, which, again, I'm not too sure about. I have to wait here and see whether it breaks this area. I put an alert on here. Again, another maybe 1 to 2, 1 to 3 here, depending on where I put the stop loss. Probably around here would be a nice stop loss. 1 to 4. It's kind of like a no-brainer based on the probabilities that I have with my strategy. I 1 to 4 there. And then there was this one, which is nano nuclear energy that I'm looking at today. Again, very similar setup on a breakout. While the market reverts to the mean, while the S&P 500 goes to 5,900, if it does, I can position myself in these stocks and see some gains. Even if it's 2 to 3% in a bad market, it's okay. If it's a little bit more and we get lucky with some of these picks and they fly, and hit these 1 to 4, 1 to 5, 1 to 10 levels, then I can make another 10, 20% here. I think that's it for today. I'll try and update you guys after I take some trades. Of course, I didn't take many trades last week because of the market conditions. I will update you if there are some major trades today at the end of the day with another video, and try and update as much as I can, maybe every day or every 2 days, depending on when I enter the market. I've made some adjustments. If you guys want to see this information prior to me entering or around the time that I'm entering, I do share some of these ideas in my Telegram group. The link is going to be in the bio of this video. I also recommend that you guys subscribe to the channel, because I will be sharing this and being as transparent as I can with the moves that I'm making in the markets and how I'm positioning myself and also rebuilding portfolios pretty much every 2 to 3 months, because the market conditions will vary. And this year is a very tricky year. And I think I've managed it very, very well so far with a 9% gain, 9.2% gain, while the market's down around 5 or 6%. All right, that's it from me. See you next time. Take care.